Hello and welcome. My name is Carrie Tomei, and I'm one of the founders of NVNG Investment Advisors. Whether you're participating live or watching on replay, we very much appreciate how valuable your time is and intend to bring you an insightful and useful discussion that will serve your organization well. NVNG was formed nearly 1 year ago now as a platform designed to serve underventured geographies or industries, where underventured means to us ecosystems and organizations that could benefit from more exposure and access to venture capital. Venture capital has been our tool of choice because we believe exposure to this asset has the ability to simultaneously deliver a financial return in tandem with its role as a strategic tool within corporate innovation programs. We also believe that healthy startup ecosystems support healthy economic growth. The presence of professionally managed venture capital is critical to the success of entrepreneurial ecosystems. Venture capital seeks out new technology. It supports startup company formation and early company expansion, and ultimately, it drives successful exits. Today, you're going to hear live examples from Michigan and Ohio that support our belief in the impactful role venture capital can play. Today's webinar is the second put on by NVNG in our efforts to raise the profile of the Midwest venture capital community while working to attract venture capital more locally. In the first panel discussion, we spoke with 4 seasoned Midwest venture capital firms to highlight the attractiveness of the opportunity that exists from their perspective. The focus today is on how 2 of our neighbors have increased the amount of outside venture capital invested into their state startups. The topic will center around how they've connected venture capital and their state's corporations. Renaissance Venture Capital in Michigan and the Centrifuge Syndicate Fund in Ohio are live models that have successfully provided venture capital returns, supported corporate innovation efforts, and consequentially have created robust startup communities that are driving healthy growth today and for the decades to come. My partner Grady will be facilitating today's discussion, so let me just turn this over to Grady without further ado to introduce today's guests and get the conversation started. So Grady, take it away.
Thank you, Carrie. And yes, very excited to be diving into this topic and to learn about how our neighbors over in Ohio and Michigan have been able to operate such great programs and in their efforts to connect their local investors and corporations to venture capital all over the country. With me, we have 2 individuals, each representing their own venture capital firms, and we'll start with Sarah Anderson. Sarah is the manager of the Centrifuge Syndicate Fund over in Cincinnati, Ohio. The Centrifuge Syndicate Fund is a strategic fund of funds with over $100 million in assets under management. They invest in early stage venture capital funds across the country. Investors in the Centrifuge Fund include Procter & Gamble, Kroger, Great American Financial, Smuckers, Western Union, and several other large corporations across the Midwest and Ohio. The fund invests primarily to provide access to innovation for its member corporations. So Sarah joined Centrifuge in 2013 and is responsible for the fund's investments and working with their corporate limited partners around their innovation and growth strategies, all while ensuring a return on innovation. She's actively engaged with venture portfolio managers, both nationally and internationally, to create relationships between funds, founders, and corporations. Prior to Centrifuge, Sarah worked with early stage venture capital funds and technology companies during her career as a vice president at JP Morgan in San Francisco and as an investment banker at the Royal Bank of Canada. Sarah, thank you for joining us. Next, we have with us Chris Ryzik. He's the founder and chief executive officer of Renaissance Venture Capital Fund in Michigan. And it's a first of its kind network fund formed by a group of Fortune 1000 and major private corporations. Renaissance works to invest in and strategically connect venture capital funds and startup companies with major corporations. Chris's work with Renaissance has led to several awards, including E&Y's Entrepreneur of the Year and Crain's Detroit Business Newsmaker of the Year. Prior to Renaissance, Chris was the co-founder and partner in Michigan's 2 largest venture capital investors, one of which nanotechnology company, holding company Ardesta, and tech fund Avalon Technology Ventures. And he's received 4 consecutive Deal of the Year awards by the Michigan Venture Capital Association. Chris is also a member of the steering committee of the New Economy Initiative, the National Advisory Board of the University of Michigan's Office of Technology Transfer, and serves on boards and as an advisor to several venture capital funds around the U.S. And fun fact, Chris is also the founder and publisher of SoulTracks.com, America's most popular soul music online magazine. Both of you, welcome. Thanks so much for this.
Thanks, Grady.
Great to be here, Grady.
Yeah, and I do want to extend that thank you from our audience and us at NVNG for offering your time today. I do want to start, so kind of jumping into it, and we'll just go through some topics here. I do want to invite the audience to leave questions in the Q&A section. We do have time at the end for that. But I want to start by asking each of you to talk more about your firms and how and why they came to be, almost the founding stories, if you will. And Sarah, I'd like to start with you. Now that we know Centrifuge and know the Syndicate Fund and what you're managing, tell us about that founding story and how this came to be in Ohio.
Yeah, so Centrifuge was created by the CBC. It's a group of businesses, the Cincinnati Business Council. It's a group of the largest businesses in Cincinnati. And they came together in 2011, 2012 on the heels of big corporations pulling out of the Midwest, which is a pattern that we continue to see, and really put their heads together to say, how can we make this region more competitive, both for themselves and their own ability to recruit talent, but also for the region and for job growth and, to ensure that populations and demographics could have opportunities to stay after college and after high school. So they created Centrifuge, which, if the best way to think about it, is really a one-stop shop for startups. And so, the Fund of Funds is a part of Centrifuge. It's not the only part. We have a team of about 20 individuals that serve different parts of that startup journey. So we have people that focus on getting startups their first customer, and we call that our customer connections team. We have people that focus on getting startups that first little bit of funding, and we call that our funding connections team. Not too creative, but you kind of get the gist of it, right? We also help with talent. We help with programming, mentorship, board development, things like that. And so really it's meant to take all these little baby seeds that we have in Cincinnati and help build them through different mechanisms. As part of that overall story, we have a fund of funds, and that fund of funds focuses on early stage venture. And they created that by and large to drive innovation into our corporate investors, right? Which has done in spades, and I can talk about that, but also to create leverage in this small Cincinnati ecosystem that we have, to create leverage from a funding standpoint and leverage from a network standpoint, right? And so it's not just the little itty bitty portfolio that we have, it's the vast network that we can pull on around the world to bring into the region now for resources, anything from helping on specific RFPs from corporations around innovation needs to funding our startups to, for instance, FounderCon was hosted in Cincinnati in 2015, things like that. So that's kind of our origin story, how we came to be and kind of what we look like today.
No, and yes, Sarah, we definitely will get into some of those kind of concrete examples and some of those initiatives you guys have on the connections platforms that you guys do. So, but thank you for that background. And then Chris, Renaissance is there to support Michigan investors and corporations, and we'll touch on again those examples later. But what started the Renaissance Venture Capital model in your state?
Yeah, thanks, Grady. Really, this goes back to 2006, 2007, when a group called Business Leaders for Michigan, which is similar to the CBC in Cincinnati, it's the CEOs of the 80 or so largest companies in the state, got together to talk about some challenges we had. And, if you recall back then, Michigan was sort of in a one-state recession for the better part of a decade. You all caught up with us about 2008, but we had been in there for a while. And so, what we saw was a few dynamics going on, and that really prevented a robust startup economy. We had these major universities, including the University of Michigan and Michigan State, which together do a little over $2 billion a year of research. And yet we were kind of a middle of the pack place for tech startups, which didn't make sense. At the same time, we saw major corporations beginning to look externally for innovation and not really having experience doing that. And then third, we had just a general shortage of capital for community startups coming in. So the idea behind Renaissance was to address that in the form of a fund of funds. And so we formed Renaissance with kind of three legs to the stool. One was this really had to be a system that was going to be top tier financial returns, with the idea that we wanted to continue to be able to raise funds time after time after time. There had been a number of states that had had state-sponsored funds designed to help with economic development, but they tended to not work. And we can talk about some of those reasons, but they particularly, in the front, didn't work from a return standpoint, so they never had the ability to create a second fund or a third fund. So we were very focused on making sure our investors got strong returns. Secondly, we were going to use this as an opportunity to invest in the best funds around the country, the best venture funds around the country, and get them engaged with Michigan. And most of them had not been engaged before. And the third leg was one way in which we were going to be able to do that. Not only did we look at investing in those funds, but we had about 70 major corporations which were engaged with us in one way or another. But an important way was raising their hand and saying, we'll look to become first customers of startups that come out of this system. And that allowed us to get into some of the best funds and to attract them into the state. And we're at the point now, we can talk more about this later. We've now we've attracted about 1.8 billion of capital into Michigan startups from the work we've done, which is more than double what our benchmark was at this point in our existence. So we've been doing that. We've raised 3 funds. We've raised a little over $250 million. Much of that has been corporate money, major corporate money, but over time we've had more and more institutional investors coming in because our return profile has worked for them and they cared about growth in the state.
Thanks, Chris, and thanks, Sarah, too, for your backgrounds on your funds and sharing those stories. I mean, they're certainly both in their own like very interesting when it comes to these investors coming together and these corporations specifically coming together in your states to make these things happen. And so I do want to look at the investor side. So the institutions, the corporations, your own limited partners. So who these funds, your 2 funds, are designed for, right? So Sarah, Chris alluded to it as well. With many state-backed initiatives out there centered on economic development and entrepreneurial growth, and we have many in Wisconsin, but Centrifuge and Renaissance too, you guys are they're not state-run efforts. So can you, and this is a 2-part question, but can you speak to the importance of your investor base, that being institutional investors and corporations, and why this investor group is crucial to your fund's success?
Yeah, so we don't have any state money. There has been that pressure, and we have not wanted or needed to have the state participate, in large part because, I think as Chris alluded to, a lot of the state programs have struggled in the past because, it's a negative selection bias, right? You're coming to a high-performing GP and telling them where they need to invest and how they need to invest a certain portion of their capital. They're going to tell you that they're not going to give you allocation. So we have raised from predominantly private corporations and public corporations that we would look at as strategic investors. And because of that, we operate almost as an outsourced R&D arm for them. We are pushing the envelope for a lot of them in new capabilities that they don't already see or have insight into. And our thesis is that the node for this type of insight and capability building are the VCs, right? So innovation is inherently inefficient. It has about a 10% hit rate if you look at the number of startups corporations look at versus those they actually work with, and even less if you look at those they actually work with in a big way versus just a pilot. And so our thesis is, look, we can supercharge this effort, and we can supercharge it without any additional, infrastructure for the corporation by going straight to the venture fund. Venture funds have a lot of insight into market trends, patterns in industry, new capabilities, and also being able to direct the corporation into which startups are actually worthwhile and which startups can solve particular challenges. And so, it has shaped our strategy and the way that we work with our investors by the fact that they are strategics and it's not public state money that we're solving for. I would say also, our genesis story has been one of a business creation, right? We were started by the largest companies in Cincinnati. And because of that, we were structured at the outset to serve both their needs and the needs of the region. And it has helped. Fund One was very focused on the regional needs. Fund Two, we found out that our corporation innovation help too. And so that should be a benefit that they receive in a bigger way. And so we doubled down on that in Fund Two. And so, we do continue evolving and optimizing based on what we see and hear that our investors need.
Yeah, I do. I mean, it's interesting looking at kind of just the evolution of Wisconsin too. And now we have, our own state initiatives called the Badger Fund of Funds. And we were able to add a new one in Milwaukee recently. And so it's been great because they're geographically focused, right? But to have your venture managers that you guys are looking at, it's very tough to access those really top tier funds and tell them that they have to invest here, right? So bringing that exposure makes more sense to me. But, and we'll kind of talk about how you talk about the outsourced R&D to corporations. I like that a lot. But Chris, first, so in the Michigan market and looking at the Renaissance has been around longer and you have more funds, the successes of Renaissance, do you agree with the capital coming from these types of investors that Sarah mentions, but in Michigan, has this been critical to the success of your funds? I mean, the investor base that you two have and what NVNG is targeting as well is different than a lot of other fund-to-fund models out there. Can you speak to it in Michigan for you guys?
Sure. Yeah, it's been real important. And I talked about the three legs, and they are all completely interrelated. So having major companies like DTE Energy and Blue Cross Blue Shield of Michigan and AAA and Lazy Boy and Masco and Ford, et cetera, having them engaged as investors, but also again as sort of strategic partners. We're trying to provide for them innovation, but at the same time, their presence in the fund allows us to go around the country, find the very best venture funds. And to give you a background, the very best venture funds don't need our money. In fact, as Sarah sort of alluded to earlier, the best venture funds are raising their funds very quickly. They're dramatically oversubscribed, and they're picking and choosing who they want as investors. And the fact that we come with this customer base that's interested in these funds, interested in working with their portfolio companies, that gets us into the best funds, which therefore helps financial returns for the fund. So that becomes related. And then getting into those best funds, they come and we get them to engage in Michigan with startups in Michigan, and that causes more and bigger investments into Michigan startups. So everything works together, but it all begins with the fact that we have a different type of investor base. In some ways, a fund of funds is a bit of a dime a dozen unless there's something special about you. And we feel that piece of what we do, this connection work, is what makes us special. There's Renaissance, there's Centrifuge, and there's the HX Fund in Houston. We're the only three funds of our type in the country that are truly strategic fund of funds.
Yes.
Grady, just to add to that, so to Chris's point, having the corporations actively involved in the fund, they're not passive investors, right? They're actively involved, helps us recruit those top level VCs to our regions. Now, if you think about developing a startup economy, you have to be able to grow and scale some big startups. You need company builders to do that. The best VCs in the country are those that are going to be building the most sophisticated startups that will then go on to exit. So it is a virtuous cycle that really has to happen here. And we have been, like, case in point, because P&G and Kroger are investors in Centrifuge, we were able to go out to the Pacific Northwest, invest in Madrona, which was an oversubscribed fund, right? They have since made their first investment in Cincinnati in a company called Bindley, which may have been a company that they never would have seen, right, without that virtuous cycle happening. And so, it does work, but I will say that to Chris's point, the corporations are kind of the honey, right, that bring the bears to the hive. And we have to have those to make the model work.
Right, and I agree completely, and it's been interesting in talking with our own venture capital firms that, we're looking at is they want exposure here, and they want exposure because of the large corporations that exist here, right? And having a professional group like Centrifuge, Renaissance, or NVNG sit in the middle as that facilitator that can go out and find these funds for them it's been interesting to learn about that kind of strategy. And so you talk about the three, you two included in the one down in Texas, it's been awesome to see those things work really well. And so, Sarah, I do want to kind of touch on, because I think it's important, and you talk about it a lot, the pooling of capital. Pooling makes this possible, the leverage behind this group and this herd. Can you go into a little bit more detail on that? And if it's, just we have the corporations, but the actual leveraging of this is, things I've heard you talk about in the past.
Yeah. So from a corporate standpoint, when they think about their own innovation capabilities, they have a lot of options on the table, right? They can create their own CVC, they can invest in a fund of funds, or they can, go out and kind of just partner and pilot, and dabble in different areas. Investing in a fund of funds like this, if you think about creating an independent CVC within a corporation, it takes a lot of capital, right? $30 million or so reserved to invest in startups and create your own internal portfolio on top of the team that has to be in place to execute that. With a fund of funds type model like a Centrifuge or a Renaissance or an HX or NVNG, you can invest maybe 5 million instead of 30. And that capital is pooled with a larger group of corporations and still are able to create a portfolio and develop actually a much broader network for any type of innovation need that the corporation may have. And it not only creates leverage from a capital standpoint, but it creates a lot of leverage from a human resources standpoint, right? And one of the unforeseen benefits that we've seen in this model too is oftentimes our LPs are asking each other about best practices, right? So AAA may reach out to Kroger and say, hey, I saw that you guys have enacted this type of infrastructure in your innovation teams. Can you tell me how it's working? Is it something that we should try? Is there something wrong and maybe we should do something differently? And we see those types of connections happening all the time. So it does create kind of a stronger window for corporations to learn from each other and leverage their own internal capital as they're developing their own innovation programs.
I want to dive into that more, Sarah, on the connections aspect and the interactions that you guys have at your level. I mean, the funds really well, your investors very well. The investors are starting to get to know the investors, right, too. And so I recently spoke, Sarah, to one of your corporations, and I'll leave them nameless, and thank you for the introduction, but they kept referring to your venture capital firms as their own industry analysts. And I really like that. I like the idea of us being the outsourced R&D for your investors, but the industry analysts, because they have a group of venture capital firms that they like a part of they have them to dinner when they're in town. Yeah. And they see the industries that they're looking at, and they see obviously their own industries, and they're able to, this individual's words, he's like, I just give them my problem statements and they can run with these and they can help me work through them on my own internal innovation. So, and it's clearly one example, and they're a bit further along, but can you speak to about, and kind of continuing your train of thought here, the investors and how they've interacted with your venture capital fund managers, and then also how on the investor side, what I find interesting, your corporations and investors are actually becoming a lot more collaborative with one another. And I think that communal group, and it's driving a lot that's going on in Ohio. But can you speak to more about, the interactions between the funds and your investors?
Yeah, so a lot of our corporations before starting to work with Centrifuge had been very accustomed to like a fee-for-service type model, right? Working with McKinsey or a BCG, or other type of organizations to pay, you know, hundreds of thousands of dollars to get a study and then kind of go forward with their innovation program. A lot of what we've been able to capture, and this is all part of investing in the fund of funds, is instead of the McKinsey and BCG approach, doing an actual hands-on approach of, hey, if you have, so a good example, right now we're working on something called a venture teardown. And this is a 48-hour, very intense session with one corporation who has a problem statement. And they want to know about new products in the insurance space, right? New healthcare products, new cybersecurity products, new auto insurance products. And so what we're able to do, and especially in a virtual environment, is pull VCs from all over the world into a space for a very stacked and intense period of time, select startups, right, to do demos and showcases and start thinking through what is this space of new potential insurance products that we could offer, partner with, et cetera. And so we've been able to kind of create those types of products that get them outside of the square box thinking of a McKinsey and BCG type of arrangement. And these VCs want to work with these corporations. They want access to them. So it is free insights, right? It's free help, and it's very customized. Like what we do is very hand-to-hand combat, right? No corporation has the same team infrastructure needs, problem statements. So it's a very customized approach. And I think, at least, and I'm biased, but I think they get more out of this than hiring a consulting team to draft a report around the same innovation themes.
Well, I would hopefully agree completely, because you guys know the venture space. And then, so, Chris, further along, again, Renaissance, you've got a couple of funds in markets now, but the stigma around fund of funds, and again, you and Sarah, NVNG, HX, all very strategic focused, right? They are different than other fund of fund models out there, but fund to fund managers, we're not as hands-on with our portfolio companies, or we're the middleman, or other things. And you can clearly hear it from Sarah that we do so much more. But can you go into, Chris, because your role as a facilitator almost of managing these professional venture capital relationships and what it's done for Michigan? Because I think the fund of funds is different than running a venture capital firm, but putting all the pieces together is still, it's tough, but then actually connecting everything can be even tougher. But can you go into that, because you've been in market for quite some time?
Sure. I mean, I guess if I were to sort of say at the high level, our goal is to remove friction from connecting people, and to connect people who may not even know that they want to be connected. So if you think about the connections we do, we're connecting Michigan startups with venture capital, and then we're connecting venture capital firms and their startups to major corporations. And in each case, these are people that wouldn't naturally connect. And so an example in the first one, we create something called the Hot List. And we work with about 30 local organizations, accelerators, university tech transfer offices, et cetera. And at any time in the year, we can identify these are the 50, we believe, most promising up and coming startups in the state. And we are constantly pushing them out, first to the funds in which we've invested, but then also to about another 700 venture funds, with the idea that those funds would not have come to Michigan, likely would not have found these startups, but we're giving them pretty rich information that removes all the friction from them spending time here or looking at startups. And to give you a sense, that hot list, which leads to actually, we do a day called Undemo Day, which is sort of like that hot list in person, other than in 2020, where we'll bring in funds and set up hundreds of one-on-one meetings. In the first half of 2020, over a quarter of the venture deals that happened in Michigan came from our hot list. And that's really saying something. I think we had 41 deals in Michigan in the first half of the year, and 12 of them were introductions that we made. So, and these deals wouldn't have happened simply because there wasn't a natural connection between, a venture fund in California or Texas or Florida with a startup company in Detroit or Ann Arbor. We created that and made it easy. Similarly, and Sarah's gone through this and they do a great job of this at Centrifuge, is finding out, we have these corporations that are our stakeholders, what are their needs? And at any point, we know, if you look through the funds we've invested in and their portfolio companies, we have about 600 to 700 startups or early stage companies that we have a stake in. And we know them all, and we track them and what they're doing. And so the idea is, and here, an example just happened this morning, one of our investors, an insurance company, called with a very specific issue. And they said, is there something in the portfolio that addresses this? And as a matter of fact, we found 3 companies that address that. And we made those connections that wouldn't have happened otherwise. But with the idea that, even if we didn't find something in the portfolio, we then have another network of venture funds we haven't invested in, and we can reach out to them. The goal being to be 1 degree of separation from just about any answer that our corporate stakeholders need. And as Sarah mentioned, if we do this right, the financial returns on their investment are really solid and they're doing well. All this other stuff comes free, just for being a member. And that's a pretty nice feature that you don't find in the corporate world.
Right.
As one of our investors put it, Chris, you're actually making a return on your innovation program, which usually is a cost center, right?
Right.
Sarah, speaking to kind of what Chris is talking about and those added benefits that these fund-to-fund models specifically can provide, you alluded to it earlier, but the funding connections, the customer connections, and those names are fine, but I am curious, can you go through those a little bit, maybe with some examples, and share what you can, obviously, but how those programs have worked in connecting you guys?
Yeah, so we actually are adopting Chris's hot list. Because one of the things that we found on the funding connection side, there is a lot of hand-to-hand combat, right? And it's hard to scale with a small team the amount of exposure startups need in the Midwest to raise capital, right? Over the past 8 years, we've met with or had intro calls or diligenced over 700 VCs. So within our network, it's huge, but it's a matter of being able to filter down into those VCs that startups need exposure to at the right time. So doing something like a hot list is brilliant in that respect, because actually a lot of coastal VCs right now are looking at the Midwest to try to get better valuations, to try to see technologies that may be competing with their own portfolios and, where they should place bets. So it's a really good time to be able to offer that deal flow up on a silver platter, like a hot list. So, the Funding Connections program has been strong. I would say in the Midwest, we tend to, and Chris, I'm not sure if it's the same for you in Michigan, we tend to have a very flat pyramid of startups. So our startups tend to be very young, little babies, maybe seed, pre-seed. Our network is filled with very strong institutional VCs. So think about maybe Series A, Series B, and because of that, there's maybe a handful of startups that we really can just drive capital into. And those have been some of the biggest winners in our region, and probably some of the bigger exits in our region. Now, on the customer connection side, on servicing LP, so that's kind of the regional component of building that startup ecosystem, right, which is absolutely essential. Now, tied into the customer connections component of that, we do spend a lot of time there. We actually have 2.5 people that focus exclusively on our investors and their innovation needs. And some investors are a lot more active than others, right? A lot of it depends on their own internal infrastructure and how they can absorb innovation. But it takes a lot of work and a lot of customized work, and we haven't figured out how to scale it or if scaling it works. In fact, there's a chat that came in on exclusivity and how we work with competitors. And I would say one of the things that we found is we just have to work with organizations on a very customized basis. And what we might do with AAA, we don't talk about with a P&G or a Kroger, even though they're not competitive, right? when we were raising Fund 2, we were actually looking at 2 very competitive CPG groups. And we talked to the one that was already an investor, and they said, absolutely, like they're more than welcome to participate. But we want, our needs to stay confidential, which is an absolute, right? So yeah, does that answer your question?
It does, and I think, and Sarah, we had a question just come in, and I'll try to hold off, but it's so relevant here. The outsourced R&D for a company, and we alluded to it, but adding corporations and speaking with them that do compete with one another, right? So, and they have proprietary deals. Do you have exclusivity on deals for a company to cover that industry? And this individual is asking, automotive comes to mind for them. Speak a little bit more to that, if you could.
Yeah, so this might be very applicable actually to Chris's LP base. For us, like I mentioned, we keep everything very confidential and customized, and we don't talk about the needs of other LPs to each other unless they tell us it's okay. But Chris, I know that you deal a little bit more across competitive industries, so maybe you could talk about that.
Yeah, we haven't had the issue on competitors who didn't want somebody else in. And I would say a lot of the innovation that we have, and so let's say we had automotive, a lot of the innovation has not been innovation on how to make a car. It's been in all the other elements of the business. So, for instance, we had an event last month where we brought in all of our investors to have a day to talk about cybersecurity. And we brought in 15 to 20 cybersecurity companies from the portfolio. They're not competitive on cybersecurity. They're not really competitive on HR technology. These are more sort of tangential or operational, but really these tend not to be innovations that are so core that there are competitive issues that come up with it.
Or even like we're seeing a lot of data analytics, supply chain issues around COVID, even sustainability among a lot of our LPs, trying to get plastics out of the system, trying to make their supply chains a lot more sustainable. And so, yeah, I agree with Chris. It's not, and we do get this question a lot from our LPs. Well, why should I invest in a fund of funds that's broadly investing across multiple categories versus just investing in a fund exclusively focused on retail, for instance, right? And our answer is because the challenge is inherent in running a business and managing a multinational corporation, or even if it's a medium-sized corporation, are not exclusively focused on your core business needs, right? If you think about data analytics or even new categories like blockchain was 3 years ago, right? Being able to quickly get educated in that category outside of an exclusively focused categorical fund is paramount. Being able to access networks from multiple perspectives, we have seen the advantages that has had. So of course I'm biased, but we've had to field that question quite a bit.
And I would say even we have a number of investors that have their own corporate venture capital funds, and we are not competitive. In fact, it's a great relationship for the reason that Sarah and I both talked about. Their focus sort of deep and narrow, and what we're seeing is not nearly as deep, but is very wide. And so we can help in areas that are not core to their business, but maybe operationally very important.
Right.
You guys, well, I'll bounce around here because you brought it up in the future of work, the future of the venture capital industry. It could look a little bit different just by the way of startup companies, and these corporations are becoming more involved. So Chris, on the corporate side, and I'll ask you guys to just think about what the future may look like, but you said it right. I mean, we've seen coastal corporations graduate to the corporate venture arena, and we've seen them, they all have their own funds at this point and with different names. But Midwest corporations are increasingly starting to adopt this thinking. Many already have, and we have a lot of CVCs here in the Midwest too. But for those that don't have that, those with innovation groups, or maybe those just trying to do something but not yet there, Chris, how do you recommend that those groups start to get involved? Because I hear Sarah talk about, the broad exposure is very important. but a lot of corporations might not even have the person to run these strategic connections. How do you suggest that groups like that start to get involved in venture or the innovation space?
Yeah, I mean, well, obviously, I think a fund of funds is a great way to do it. But but when I think about I look at the corporations involved with us, and I think most corporations have developed where there is a person or a group that is leading the innovation efforts for that organization. But unless you are a venture investor, your innovation team is going to have troubles finding all of the early stage innovation going on around the country, especially with the kind of breadth that we talk about.
Right.
So we have some of our best relationships with those groups where the head of innovation is our day-to-day contact, and we are a resource. So they're doing what they're doing, working with new types of technology coming into the organization, doing pilot programs, but invariably they're contacting us and saying, okay, as Sarah said, let's talk about blockchain, or let's talk about cyber, or let's talk about sensors. And we're helping give them a base knowledge in that area, and also helping them to contact either a fund or several companies in that area. And that may lead to pilot programs, et cetera. And there's that. And then there is also, we do proactive reaching out to our investors, and it may be on things like, okay, so we want to talk about this topic. It sounds like this is an area you'll be interested in. Let's get you together with us, some startup companies, and also some others of our investors. And you can share ideas with the startups, but also with the other cohort. And it just becomes a real valuable service to that innovation person who doesn't have a $50 or $100 million corporate venture capital fund to do that for them.
Chris, staying on that, and more talking about the portfolio of funds now, how specialized will you guys get? I mean, when you're out there looking at funds in the market, and I hear from both of you, the attraction of the corporations can get us into some of these top tier funds that you guys are absolutely right. They're oversubscribed. They're very tough to get in contact with, but they like these models. How diversified do you guys get, Chris, at the portfolio level with your funds? Is it specific to your investors and corporations? Is it cross industries and stages? Is it speak more about the portfolio as a whole?
I mean, we're truly creating an investment portfolio. So we have early stage funds, we have later stage funds, and we cross many sectors. We do not pick a fund. For instance, if we have two utilities that are investors, that doesn't mean we're going to pick an energy fund. We are picking a broad fund that we think will weather different types of financial times, different times when certain sectors are hot or not hot, to create the best return for our investors. But it's broad enough that we can cover most every major issue that our investors have, but we do not cherry pick funds based on an individual investor. That typically is not a great way to create an investment portfolio.
Sarah, I want to throw the same question to you, but then I also want to talk about kind of your portfolio. I mean, both of you, you're able to attract and invest into venture capital funds on the coast or outside of Michigan, outside of Ohio. But more on that, Sarah, the importance of investing out of state. I mean, Ohio has so many venture capital funds now, and I think a lot of the growth is attributed to the centrifuge model. But the venture capital funds that reside outside of Ohio that are in your portfolio, they want access to Ohio too. They're good financial return. But the importance of investing in and out of the state for you guys.
Yeah, so we can take absolutely no credit for all of the fund formation that has happened in Cincinnati, Ohio, but it has been quite active over the past 2 or 3 years. And I think, by and large, because we've had a lot of talent that has emerged from the Cincinnati ecosystem, nothing that Centrifuge did, we're just in a really lucky position. I do want to say, I think there has to be a balance between investing, not necessarily locally, but I would guess more regionally, and investing in kind of a regionally based portfolio of really high returning funds that are looking across multiple geographies. And also coastal funds that can bring a lot of, like I mentioned earlier, startup building expertise to the table, how to build big scalable startups that can exit and really create that competitive ecosystem that we're looking for. So it is a balance, and it's not to say that there's any right answer. Chris has sleuthed out some of the best investors, I think, in the Midwest region for sure, and coastal, and has done a really great job at building a portfolio that can help Michigan scale. We're seeking to do exactly the same thing. And I think one of the things that we do look for a lot when we're looking outside of the region are, who are those partners, specifically partners that may be part of a larger fund, but partners that can grow and scale our local startups. And are they interested? Do they have a history of investing outside of their own local epicenter? So if they're a San Francisco fund and they've never invested outside of California, then that's probably a little bit less interesting than a San Francisco fund that has invested in both California, New York, Boston, Atlanta, Chicago. Those are the types of investors that we want, because they're not afraid to get on a plane. They're not afraid to look at new geographies, and we can bring them here to our region. And again, the way that we do this is by seeding it with big co-relationships. And that creates a very organic relationship where they're coming back and forth to the region. The ultimate hope is that they write a check here into one of our startups. And look, if they do that, the benefit of this model is within one round of funding. So Vendley's a great example. They raised 30 million or so, I think, in their last round. Madrona was 8 of that 30. They're not the entire round. They're investing part of it. But now you have 4 different funds that are coming to Cincinnati quarterly, maybe when COVID's over, right? And they're now in Cincinnati and looking at our startups outside of Vendley, right? So you create this strong flywheel that just starts to work and build on itself, and you get a lot more venture activity in the region. And that's coming from VCs that are outside of the region that have not already seen the startups that are here.
Well, I think
Sarah's point is really important, and that is, there is sort of a success begets success, and you can look at most of the major cities or regions within the Midwest, and when they've gotten that first unicorn or first billion-dollar company, all of a sudden you start to see more and more. So we had our first major unicorn 4 years ago in Michigan, and now we've had 5 in the last 4 years. And now when we talk to funds on the coast, they know about Ann Arbor and Detroit. And I know Sarah has the same stories in Ohio. And now when we talk to a fund on the coast, they're like, gosh, we didn't get into Duo Security, or we didn't get into Lamasoft. We don't want to miss that again. And now they want to get engaged. So I think, and Indianapolis has had the same thing. Columbus, Cincinnati have had the same thing. And I know Wisconsin recently had a unicorn. And that really does help to attract these other investors, because a unicorn in Ann Arbor or in Cincinnati or in Wisconsin is going to yield for its investors a lot greater return than a unicorn on the coast, because they got in at lower prices. Chances are these companies were operated more cash efficiently, et cetera. So $1 billion here might be the equivalent of $3 billion in San Francisco.
So Chris, on that, aside from valuations, aside from the trends pointing toward the Midwest, right, and these coastal funds are becoming a little bit more mobile, more nimble, and they can make investments here, what's attractive about a Michigan-based startup or an Ohio-based startup relative to their, comparison over in Silicon Valley or in Boston or New York? I mean, it's interesting that, you guys play a great role, and I think it is our role to raise the reputation and the exposure for our states, but the funds still have to invest here, and they are doing it, which means the startup companies here can compete at real levels, and the Midwest reputation, I think, is becoming a lot stronger. But what specifically about Michigan makes them, this is a great startup for me, and I need to talk to Chris.
Well, the first thing is the talent base. And it's the existing talent base, particularly in our case of engineers, but also it is the feeder universities. And that's where Wisconsin is particularly blessed to have this great research university where students are graduating. A lot of them probably want to stay in Wisconsin, and there was a time when they couldn't stay in Wisconsin if they wanted to be in a tech company, other than unless they want to get Epic. But that is a real draw. So the talent's one draw. There is a financial draw that we reference in that there is less competition for deals, and so it is. If a firm from the coast wants to come look at deals where we're at, chances are they can get in the deal, and it's not going to be as competitive going in. And that changes the whole math equation of what success means for them. If a startup company in Michigan is valued at $10 million, and that startup company in California would be valued at $40 million, well, you already have a math advantage coming into Michigan, and that valuations are lower at the beginning. When they sell, though, they sell at the same price. So there's that advantage. And third is, I talked about the talent, that not only is there a lot of talent, it is not sort of the meat grinder, turnover type of talent that happens on the coast. So employees who work for tech companies here tend to stay longer, and there's less jumping back and forth. So you can really build a team that can see you from startup all the way to IPO or exit or whatever.
Right.
And just to add on that, the secret is out that great companies are being built in the Midwest, and especially right now in a distributed environment, great companies are being built everywhere, right? And so for VCs not to capture that and not to get in on some of the value and the opportunities that are here, they know that they're missing out. And we get the same requests that Chris gets. We need deal flow from your region. We need to know what's happening. And, I think a really great example, so Mavron, which is a GP we have invested in out of our fund too, just Stealth, and just launched a company called Picasso, which raised a $286 million Series A round. Now, a lot of that was venture debt, because that sounds like a huge Series A round, but it's in the prop tech industry, and their very first office is in Cincinnati, Ohio, right? Now, Austin has a background in Cincinnati, so this is kind of one of our alums, but this is what happens. This is the leverage that is in the system that kind of creates this flywheel effect. And, there is a lot of interest in deal flow coming out of the Midwest because we're hard to access. If you think about Midwest ecosystems, we're really distributed and we're much smaller. So you're not getting the density and you're not getting the quick, exposure. In San Francisco, you could see 25 startups in a day. Here, you're going to have to fly from Indianapolis to Cincinnati to Chicago to Ann Arbor to et cetera, et cetera, et cetera. And so it's just harder to cover.
Yeah, Sarah, you guys, and what's been really interesting to see too is following the renaissance in Centrifuge since you guys have started almost. It's you guys are very collaborative with one another. You have startups operating, in a competitive environment, but you guys operate very non-competitively. I think, Chris, if I'm not mistaken, you're on the board of Centrifuge too. But how do you guys communicate back and forth? And I know you have a third friend down there in Texas too, but it's all to better the startup companies that are local for you guys and your funds, but you do so in a very, you share almost. And it's an interesting model when, inherently VC is very opaque in many ways, but can one of you kind of go through how you guys collaborate?
Chris, why don't you take it? Because you're collaborative, much more collaborative with HX as well.
Yes, I mean, there is certainly, the thought that there would be competition is, if you were sort of in our shoes, you'd realize that's like the furthest thing from the truth. I think Sarah and I talk at least weekly. Well, actually, we've talked twice now today. But we share due diligence. Because again, if we're both looking at a fund from the coast, it is much more powerful for both of us to be talking to them than for one of us to be talking to them. If we're trying to attract them to the Midwest, we can do it better as a team than we can separately. So we share deal flow, we share due diligence, because each of us wants the other to make good investments so that we're both successful. And even we share startup, if one of their startup companies wants an introduction to, let's say, Meijer, with a grocery store chain that's one of ours, or if we have a startup that wants a connection to Procter & Gamble, that just benefits us in both directions. And it's the same way with the group in Houston. So it's really made us better. You know, Sarah mentioned she's borrowed some things from us, so we borrowed some things from them, including something that they created called an immersion day, where they bring in a fund and introduce them to the area. And it was a great invention, and we clearly borrowed it. So that is all really powerful for us. And the most recent investment we made was in a group called Graycroft, introduced to us by Sarah and the team at Centrifuge. So yeah, I mean, it is definitely a situation where we are all made better by our regular connections with each other.
I do want to, in our last 4 minutes here, I want to ask about the Midwest, the venture capital landscape. And we talked about it a little bit, but where do you guys see the future of Midwest VC heading? And I know it's a very broad, all-encompassing question, but where do you guys see this landing? I mean, more startup companies here are being funded by coastal firms, and again, a lot of the firms that you guys have been able to connect here to the Midwest. But is that trend going to continue? Are we going to see things go back to, you know, the true epicenters, or is it just going to be more decentralized? Because Sarah, you said it right. The geographical advantages aren't prevalent anymore, and I don't know if they will be. So, in the last couple of minutes here, guys, if you could just talk about why now invest VC in the Midwest? I mean, it makes sense to me, but let's hear it from you guys.
Want me to go?
Yeah, Sarah, go.
Okay. So I tend to think that we are in an advantageous position right now. I don't think Cincinnati, Ohio is ever going to be the next Silicon Valley, right? I think Silicon Valley definitely will continue having as much density as it has had, New York as well, Boston as well. But I do think that we're in an advantageous position that we can take advantage of. Geographical barriers no longer exist in a virtual world. And I think when we first went into quarantine and talking to VCs, they're like, I don't know how I'm going to do it. I don't know how I'm going to do deals in a virtual environment. It's not going to happen. We're just going to wait. And then lo and behold, in true startup fashion, 6 weeks later, they're like, oh yeah, you know, virtual pitches, it's no problem. You know, we just do a little bit of extra diligence with the customers. And so, you know, VCs are very used to now doing deals in a virtual environment. And I think it will be something that will be persistent post-pandemic for sure. Although I think VCs will have a natural inkling to want to do things in person again. So I think we've been propelled forward, right, by 10, 20 years. I think we will see some retreat once the pandemic is over, but the amount of progress we've made is not going to completely backtrack. And so I think we as an ecosystem, the onus is on us to make sure that we continue that momentum with the venture firms that we're already working with to ensure that they are participating in a virtual environment or in an in-person environment, and they become accustomed to working with Cincinnati startups. Right? So it's been a huge advantage, and I'm hopeful it will continue. I know it will continue in some capacity, but probably not at the capacity that it's at right now.
Chris, what are your thoughts?
So I would add that, you know, the days of corporate innovation happening internally exclusively are gone, and they've been gone for a little bit now. So major corporations need to look externally. You know, one of the things that held back the Midwest, it wasn't the lack of talent, it wasn't the lack of technology, it was cultural. We were big company towns, and, you know, startup companies just weren't a thing 15, 20 years ago. But now we've sort of seen that cultural change, which has led to greater innovation going on at interesting startup companies, greater innovation, which sort of feed now this new model of corporate innovation where startup companies are partnering with major corporations. So the major corporations are going to be looking for venture-backed startups for innovation. And the questions, you know, is can those happen in the Midwest? And I think what we've seen particularly in the last 10 years is not only can they happen here, but there are certain advantages to them happening here, not the least of which is proximity, but all the other things we've talked about with talent, with the economics of it, et cetera. So I don't think we're going to go back. And I think we've crossed that cultural barrier that we had for so long. The people graduating from college now are not the same as the people who graduated from college 20 years ago. When I graduated from college, it was understood you were going to go to a large organization. And it's a very different scene right now. And it's really exciting. And Sarah referenced this at the very beginning of her of this discussion. It's a retention, it's a talent retention element. Having a strong startup community retains talent that we've educated and really helps the whole ecosystem. So I'm 100% convinced this is not going to retreat, and in fact, it's going to continue to grow.
I am, of course, inclined to agree with you, Chris, and that is exactly what I think too. So Sarah, Chris, with respect to time, we'll stop there, and we've only obviously cracked the surface. We could talk all day, but thank you both so much. And look at that, I didn't have to use my debate mute button once. You guys did very well. And I do want to thank everyone in attendance. We greatly appreciate it, and we hope you were able to at least learn a thing or two about these similar venture capital models over in Ohio and Michigan. For anyone looking to chat with Sarah or Chris, do reach out to us at NVNG at any time. We'll happily connect you. Exciting stuff, guys, especially through the fund of funds space and the horizon for the Midwest venture capital landscape. Thank you both so much for being here today.
Great. Thank you, Grady. It was great.
Thank you so much.
And I will say thank you to everyone. And if anyone else is interested or in participating or attending an event for NVNG, just reach out to us at any time and let us know. We'll be sending out this recording and of this meeting today, so you guys will all see it. It's also posted on our website. And last note here, do follow us on LinkedIn for more events to come. So thanks, guys. Everyone, stay safe, stay healthy, and thanks for tuning in.